So anyway, look, thanks again for the Good Oil people for putting on the conference. It's a great opportunity for people to have a good audience for what they've got to say. Buru, I guess, it's a pretty simple story, and one that we think, as Chrissy said, has a lot of upside. There's some things that you really want to see in smaller companies, and we think most of those things we're able to match. We're a profitable oil producer, and that's helped, of course, by the Aussie dollar oil price. We've got a producing oil field, so that continues to generate cash for us. Got a very large acreage position, all of which we operate. Got a drilling program going on, so there's plenty of news flow, and the portfolio fits together very nicely with the cash and the exploration and the oil field. And just to emphasise what Michael Edney said yesterday, investors are looking for companies that have those criteria, but also with a market cap over 100 million. Well, of course, we just sneak over 100 million. Interestingly enough, we'll have close to 70 million in cash when our current deal closes shortly, which values the rest of the assets that we have, including the producing oil field, at 30 million. So there's plenty of upside in there, particularly with the exploration program. It's a nice, tight little company, and there's a few things, again, that investors look for. They want cash in the business, although, of course, all the brokers want you to not have much cash, so you have to go out and raise it and give them a big fee. So we're not in any danger of doing that for a while. You need cash flow to keep the cash topped up, which is where we're at with our oil field. You need some good exploration upside, and we're about to start our drilling program again. And you want the directors and the staff to have skin in the game. So that's really a big factor for us. We're all very focused on making this company a success. It's been a long road, but we've kept the faith, and things are going pretty well. So just talking about the oil field for a minute. Those of you aware of it, it was a play opening discovery. It's about 100 k's east of Broome. It's a high quality dolomite reservoir with high flow rates, very good permeabilities. Very simple, low cost production system. There's very little gas in it, so it's not a complicated field to produce. Needs artificial lift on the wells as they start to decline, as they all do. But it's a very easy, simple system. We currently truck the oil to an export port at Wyndham. That's one of the things that we're very much trying to streamline. That's 1,000 kilometres of trucking. It's fairly commercially okay, but there's obviously a HSE risk in trucking for 1,000 kilometres. The oil goes out from Wyndham into the international market. We're currently targeting about 1,800 barrels a day. We have 50% of the field with our partners, Rock Oil, and we've got a longer term goal of 3,000 barrels a day gross in the field, which we're working hard at the moment to get up to. We're very close to producing our first 1 million barrels from the field. Unfortunately, not all of that was produced at $100 Aussie a barrel. We did produce a lot of it at lower prices. I'll just talk a little bit about the commercials and the forward program on the field. As I mentioned, the crude sold FOB out of Wyndham to Trafigura, who've proved to be a very good partner for us on the oil sales. Last lifting was 52,000 barrels out of an 80,000 barrel tank on the 16th of August, and Trafigura basically come and pick it up whenever there's a ship going past, so it's a very efficient commercial system for us. We're 50-50, as I mentioned. We're the operator. Our operating costs are around that $30 to $35 Aussie a barrel, so at $100 Brent price, which we get, Aussie, it's a very profitable field. Our forward program is focusing on getting production up. We want to take advantage of these high prices, and of course your unit costs go down the more you produce. So we're currently sidetracking one of the wells, which was a bit disappointing, and we're hoping that will get our production up, and then we'll probably drill one and maybe two more production wells on the field in this season's drilling program. Following this well that we're drilling now, we'll drill an exploration well called Ungani West, which obviously is to the west of Ungani. It's a subsidiary structure, and we would think it's got a very high chance of success. How do we grow the business? Got a basin-wide prospectivity. We have a focus on the Fitzroy Trough, the main depositional centre in the basin. We've been alone in the basin essentially for many years, and we've shrunk our acreage down to the centre of the Fitzroy Trough, where we have a very large unconventional play, which I'll talk about in a minute, plus the prospectivity on the dolomite reservoirs at Ungani. Very recently, we've begun to share the basin with another number of other people who are coming in, Finder, who are focused on unconventional oil on the Broome platform, and the Squadron Goshawk Group, which is backed by Minderoo, the Andrew Forrest Company, have put a big footprint on the basin outside the Fitzroy Trough. That's been a great outcome for us because there's other operators in the basin. We start to get a bit more synergy and more activity. So we're very happy to see them in the basin. We defined a very large high prospectivity exploration program, some of which we can drill with our current small rig, some of which we need a big rig for. We're looking to get that big rig into the basin early next year. We keep starting our drilling programs late in the year and run into the wet season each time. This year we're not going to do that, and we're going to start drilling early next year on some of these very large prospects that are in the portfolio, most of which are under 3D seismic. It's frontier basin still, so relatively high risk, but there's very few areas in Australia where you can drill prospects this size that are analogues of existing fields. So under the terms of the deal that we've done with Rock, we're carried through $20 million of a $25 million exploration program of up to 4 wells. Some of that will be this year and some next year. So I mentioned we have a small rig called the Ddd Rig, which is currently drilling the sidetrack, and that's capable of drilling a number of the dolomite prospects, and then we'll get the big rig in next year to drill the deeper prospects that have much higher prospect sizes than the ones we're drilling at the moment. We're very close to signing a letter of intent on that rig, so we're very confident we'll be able to start that exploration program early next year. We're very focused on the conventional oil, and I'll give you a little bit of an update on where things are at on the unconventional in a minute. We've also looked at what happens to our prospect portfolio in 2020 and 2021, and we brought in a very high-powered, experienced team to go through the portfolio, basically sweat the assets and get us to a point where we refill the prospect portfolio after we drill next year. Obviously, if we make a discovery, we'll focus on that rather than further exploration in the short term. Talk very briefly about the unconventional. You're probably all aware there's a moratorium on fracking in Western Australia. Those of you who follow these things will see that the report of the independent scientific inquiry was tabled with the government yesterday. They apparently are going to look at it for a few weeks, and then they're going to come out with their decision on whether or not to lift the moratorium, and if they do, whether they'll put any additional regulation. There's a huge resource up here, as both Finder and ourselves have determined, and we're very keen to get after that. We're hopeful that the government will be sensible rather than what happened in the Northern Territory, where they've imposed a raft of regulations on the industry, which is going to make it very difficult for people to to move forward. So watch this space on getting back into the unconventional. So just sum up by talking about our commercial and portfolio strength. As I mentioned, cash and receivables will be about 70 million. We do have some debt to Alcoa, 7.5 million, but that's spread over 3 years, 2.5 million each year. That's from a legacy gas contract that we have with them. Got very low overheads, and I know everybody else in the audience who's been presenting is running a pretty tight shop, and we certainly try and do that as well. Cash flow is looking very strong. The oil price is high, and that gives us substantial profitability. We don't really have any work commitments on our permits. Everything we do is discretionary, and that makes a huge difference to what your exploration program looks like. CapEx will mainly be focused on increasing our production and reserves at Ungani, and of course we're mostly carried on the exploration program under the Rock deal. We've got enough cash in the bank that we won't get into that horrible situation where if you find something, your price goes down because everybody expects you're going to have to raise a bunch of money to develop it, so nobody goes near it until you do the rights issue at a discounted price. So we're actually in a very fortunate position that we have enough cash to be able to continue on with the development without having to raise any money. Got 50 to 100% of our portfolio, and we operate all of it basically. So again, that puts us in a very strong position to drive the program and the timing. A profitable oil producer, we've got our oil field kicking out lots of cash for us. Very good acreage position, got a current drilling program on some high impact wells, and a very good strong portfolio and commercial situation to take the company forward. So I won't keep you any longer from a cup of tea and a bicky. Thanks very much.